Hello, everybody. Welcome to the final chapter of the season 2 of 2 Week 2 Strong. My name is Rashid Khan, and thanks so much for being part of this exciting program. It's been truly remarkable. We were able to engage world-class trainers from around the world who have been delivering highly insightful sessions on some of the most relevant topics. A big thank you to all of you for your participation. A small announcement, very important announcement for today. There's an important event taking place tomorrow. It is the ACCA Virtual Careers Fair, which will be live from 8 a.m. till 8 p.m. And we'll be joined by over 140 top employers who are coming with over 600 exciting job opportunities. So don't miss that out and confirm your seat by registering today. Today is the chapter 11 that will complete 1,000,000 seconds of world-class learning for our members and future members. We are very fortunate to have an amazing master trainer for today's Financial Modeling Masterclass, who has joined us from Lahore, and he's right there on the screen. We have Farhan Khurshid Malik. He's the Group Financial Planning and Analysis Manager at Coca-Cola, CCI. Farhan has 16 years of professional experience in audit and assurance, capital markets, investment banking, and fast-moving consumer goods, which is FMCGs. Farhan began his professional journey with Ernst & Young Pakistan, EY Pakistan, in 2004. Since then, he has been part of multiple organizations in various roles, including treasury, corporate finance, business reporting, financial planning and analysis, performance management, audit and insurance. So he's a well-rounded professional, as you can see. Leveraging these diverse experiences and industries, he laid the foundations for his current role to lead financial planning and analysis function of a multinational beverage company operating in 10 countries with a consumer base of 400 million people. Problems intrigue him and elegant solutions motivate him. He's a data enthusiast. He believes digitization shall enable finance professionals to be part of a data revolution. He has developed insights and practical guidelines to deploy digital productivity in the financial workspace. And data modeling is his magic wand, and he likes to share the magic. So let's hear all about his magic tricks and data spells. Without further ado, handing it over to Farhan. Hello, Farhan. Hope you can hear me.
Yeah, thank you, Rashid. Thank you very much. Thank you for the wonderful intro. It's really humbling. I hope you can hear me and you can see my screen.
Yes, I can hear you and see your screen, and I'll ask this question from all the attendees as well. If you can please confirm in the chat if you're able to hear Farhan all right.
Okay, so I'm not navigating to the chat. I'm trusting you will be reading it and letting me know as, yeah.
Yeah, everybody
Okay,
is able to hear you clearly. Over to you now.
cool then. Okay, let's go. Let's try to be a little bit of simplicity that if we want to introduce. Of course, I'm very thankful to Rashid for a great introduction. But if I put it very simply, it's just that I'm one of the analysis folks doing analysis on multiple levels for multiple companies, for multiple geographies, under multiple uh, uh, understanding and trying to answer multiple business problems. This is my first webinar, so I have little butterflies in my stomach. Actually, last night when I was rehearsing my presentation, I said I have little stomach in my butterflies. So that's how confused I felt. But as an opportunity, I thought it might be an opening joke to connect with you guys and let you know, we do not want this to be one-sided monologue. We want it to be a story well knitted into where we can connect to each other. I understand that you must be also at different levels of your career. Some might be just beginning, some might be just in the early level of the career, mid-level, and if I'm lucky, some senior levels are also here. But anyways, whichever level you are working on, there are always tricks and trades of the business that you tell it to somebody else and you kind of relate your story with them. They undergo the same problems, you find out the same solutions, and then you share with each other, and you feel more empowered because you feel part of a bigger community. And as humans together, we think much better as compared to when we think alone. Data excites me because it is objective, uh, it's predictable. You can get insights out of it. You can do the crystal ball. Since childhood, I always wanted to have a crystal ball where I could see like how much money I will earn in the future, or how many cars I will have, and all sorts of like kids' dreams that you have. So I always thought about this crystal ball. Closest we can get is probably data. And with the latest technologies that we have are available to us, this is taking it to a really new level. Uh, I procrastinate a lot. I mean, I was planning to make this presentation for 1 week, but actually I made it yesterday. So always put things at the last moment. And that's why I love digitalization, because this is where you can do uh, months work in days, weeks, hours, if you're good enough. Okay, that's enough about me. Let's go to the topic. What we will discuss. So we'll discuss data modeling. So here, basically, instead of jumping to financial modeling straight away, we will just first explore the idea of data model. What does a data model means? And then we will see that, whether this knowledge bank actually transfers into the financial modeling data practices or not. And if not, then why? And is there any opportunity to improve the prevalent financial modeling ways, which, just to provoke the discussion, I am putting it as an ancient ways. So we will also discuss the new modern age financial modeling approach. We will discuss what are the concepts out there in the market, what should be the step-by-step stages of constructing an intelligent financial model, leveraging those concepts, those technologies, few tricks here and there I'll share with you. Uh, we'll talk about tools that are available to us, much beyond the usual stuff that we have been accustomed to working so far, if we are working in the mid part of our career. Just one caution note I would put here. This is an end-to-end content process overview. So you might encounter lots of new concepts, and uh, the learning outcome, or the I think your self expectation should not be that you understand and master the concepts in these 2 hours of webinar. My focus is basically to let you know how big the universe is so far, what I have found, share with you the implications for financial modeling, the whole ecosystem that is available out there, what we can do with that. And if it intrigues you and you plan to take up this approach, then you will have to indulge into quite strenuous learning curve for the next 6 to 8 months at least, in order to put this all into action and generate value out of it. We will touch base upon technology market. I'm no expert in technology. I'll just share what I know. And we will also discuss what we can do after uh, 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 seeing this examples, or seeing this methodology, or seeing this modern take, whatever we say, what we can do as a next step. Our approach will be a bit of theory in the beginning. I'm really sorry for that, but it's important to set the context. We will do some ranting. I mean, because in the social media world, ranting is really name of the game. So we will criticize the existing methods that are being used for the financial modeling, why they are bound to fail, and why you should never use them. I mean, if you're still using them, you should abandon them maybe today, if not tomorrow. That's how urgent it is. We'll talk about end-to-end. As explained, its content will not be focused on one specific aspect and then go into the technical details of that aspect, but we will try to cover an end-to-end financial modeling process from the perspective of a financial uh, analyst or financial manager, whatever. Uh, we will try to approach the traditional business problems in a little bit creative way. Uh, I have used a lot of internet while preparing this presentation, and wherever the credits are to be given, they are mentioned in the respective slides. But in general, you can say that the data is from internet, and the thought is mine, and we should be cognizant of the fact that when we are utilizing an intellectual resource, which is by far, I think, the most valuable resource, we need to provide proper credits for that intellectual resource. It's just the new way of living, not the new way of the living, but I would say it has to be more emphasized in this new modern world where data and the logic governs the bigger portion of the value. And lastly, this is something about that I learned during my 16 years of experience. Uh, you have to keep yourself calm. You have to control your nerves. You have to think deep about the problem. It used to be not that easy in, like, I would say 5 years back, because it means that you have to relax a little bit, think about the problem, and for that you need time. And as finance, and especially in financial planning and analysis, that's not a luxury that you have. So generally, it triggers a panic mode in which you try to deliver something very quickly. In the way you make mistakes, and instead of making a good name for yourself, you end up frustrated. So this is another thing that we would like to talk about, that how these new technologies and new ideas are changing the way that we work, which is much more flexible now, which could be much more flexible now, which means that logic prevails much more strongly as compared to the hard work or the midnight burning midnight oil, you know. So that's something that we will also be talking about. Let's begin. In order to understand the data modeling, I find it generally easy to open one of the most common one of the most common knowledge books, knowledge manual. And generally, I try to find the meaning of the word in the philosophical manner in the dictionary, because uh, philosophers try to generalize things, they try to make it cliche, which makes the definition a little bit enlarged. And when you envision about it, when you have a perspective about it, then you can be talking about it in a terms of, uh, I'm seeing, okay, all right. So you guys can still hear me? I just got a
Yes.
message. Okay, cool.
Yep.
So we have here, let's talk about the philosophical meaning of the data that we have. Uh, we think that there is. So the data can be assumed as a fact. It is a data point which you can use as a basis of reasoning or calculation. In this way of thinking, it also gives us a little bit of insight into that data is not only numbers. It's about any data point which either tells about the any perspective, any definition, any attribute, any property, any relationship of that object with another uh, business problem, with another entity. And that's how the universe of data is built. Data was always there. Now we have the ability to process big data, multiple data, and we have a partner now that is computer, and that does the laborious and the process and the data hungry and the process hungry part for itself. This enables us to think about the data in terms of not numbers only, but in terms of human life, in terms of general life. Uh, what a consumer is producing is data, what he's buying is data, where he's traveling is data, how much he's earning is data, what product I'm producing, that's data. Uh, so the list goes on and on and on. This is so far it's okay, it's fine. But when we talk about the model, what is a model? A model is simply, I mean, the definition as it's defined in the dictionary is something like this. But if we think about the model in a simple way, it's simply a GPS. So imagine you are taking a ride and you want to reach from an X place to a Y place. Now, what you know is that your quadrants from where you are beginning your journey and where you are ending your journey. The model, and in this way of beginning and ending, there is an infrastructure in which you have roads, you have rails, you have subways, you have so many modes of transportation. So there are multiple possibilities to reach from one place to another, and those multiple possibilities are defined by a system which is designed by, let's say, some public transport architect who's making sure that every dot has a connection to it, and every dot, and if one person wants to reach from one place to another place, they can do so. Model is doing the same thing, but it's just doing it for data. So data modeling, the concept of data modeling, it's pretty old, but the real traction that it found was in 1960s. In 1960s, the first data model that was hierarchical data model was introduced. Uh, this data model is was pretty much simple. It was simply saying that, if there is an entity X, it has following child, let's say Y, Z, A. What does this mean is that if it is one product, then this product can be sold in a country, Pakistan. Then this product can be sold in an other country, let's say Turkey. If we say that this product can be delivered to an other entity, that is the that is the movement of one entity from one parent to another parent. Hierarchical models were not considering this. They were rigid models. They were always allowing one to one relationship, sometimes one to many actually. The child could go to many, but we will go into the relationship. This seemed to be quite vulnerable in that sense that the dynamic world that we live in, it was unable to solve many business problems. So another form of data modeling was introduced that was called network model. Network model took away all the problems, not all the problems, some of the problems that the hierarchical model was generating, and it was able to connect one entity to multiple entities if one wishes to, and somehow it was able to perform the true business analysis in real time, not in real time, in batch processing. But in 1970s, something really big happened, and that is where still database management system technologies are now. So we're talking about 50 years or something, but this concept was so powerful that this concept is still ruling the world, and most of the databases that we use are basically the relational databases. The relational database was a better effort to streamline or to improve the previous data models, data modeling methodologies. In that case, it was enriched with further information. So now we are not only talking about the relationships of different entities, but we are also talking about that how these relationships affects the other relationships. So you see the level of complexity that that a relational model can handle is much better as compared to the previous two versions of it. But still, the relational models were very much kept in check because they need a lot of processing power as compared to network and hierarchical model, which are quite easy on the computer. uh, so the data processing capability kind of limited this potential of the uh, data modeling methodology of relational databases by then. Then we have got a big invention, which is, you can say, the global language of databases called SQL. IBM initially introduced it. Its name was sequential English query language, SEQL. Later on it was changed to SQL. That's sequential query language, and it is kind of industry standard. And just like you have like a normal language like Urdu, English, or any other language, you have multiple dialects where people speak it differently. SQL also has multiple dialects. So if you are a computer literate, you can talk to the computers. It means that it's possible that you can talk to a program in your preferred way of dialect in which you are more comfortable. In 1980s, something really important happened, and that was this big bam of the first, we can say, one of the first BI tools that was introduced in the market for masses. That was Microsoft Excel, of course. It was not the first spreadsheet. There was multiple previous spreadsheets as well, like Lotus 123 and VisiCalc. But as Microsoft democratized the PC and the processing capability to households, it also brought the Excel or the spreadsheets to the masses. Now, these spreadsheets, what they did give was, first, they democratized the data analysis. Previous to spreadsheets, the data analytical tools of an organization were primarily focused on the key tasks or the tasks that it gives a key priority to. Generally, they were reporting tasks. Analysis, predictive analysis, this was majorly a gut feel based thing. But as we moved on, the Excel opened a new line of business altogether, new line of professions altogether. And from 1980s, from 1990s, 2000s, we have seen a proliferation of multiple sub-business fields, which somehow deeply depend on Excel. I'll like to share my example with you. For example, when I started my training in Ernst& Young, the first thing I was asked to do was to punch some data into Excel file, and then I didn't know how, if we just add them together. I mean, if you just put the formula is equal to sum, they'll add it together. So I took a calculator, added them all, type the total down there, and I realized that this job is too difficult. I mean, if I have to do it again, how will I do that? And then I realized that this job is not difficult. I am a little bit dumber for this job at the moment, and I need to learn. So now, what we need to understand is that in terms of spreadsheets, what they gave to business people was this idea that you can crunch your own numbers. And then they also gave multiple new possibilities, multiple new calculation abilities, the dynamic calculation abilities, and also uh, were able to answer the specific business questions that business analysts. So business analysts are primarily people who are dependent upon the data model that is implemented in an organization, and that data model is the basis of the ERP, if you say, the enterprise resource planning system, or the reporting system, or any other system that organization is using. There is typically a data model behind that. But that data model is too general, it's too restrictive, it does not answer what if questions. It does not answer it doesn't produce the tables what your users want to look at. It does not produce the information that is to be discussed in a board meeting. So it means that the Excel is the bridge, or a spreadsheet. Now Google Sheets is equivalently powerful. In some ways it's much more powerful than Excel is, especially in its online capabilities. But anyhow, that's how the process kept on working. But in 2000s, the digitalization came in, and this hasn't impacted finance that much as of now. The promise is there. We see lots of material out there in the on the internet, on publications, on different accountancy body forums, but somehow the value that has been that financial planning and analysis, or let's say financial modeling, could have driven from this digitization is still a promise. It's still not happening. Why? Uh, Sometimes your success becomes your biggest curse. How? We will just look into this. So as I was explaining you previously how the data modeling thought developed, here is a little bit of more details. I copy pasted this from this really funny name site, geeks4geeks.org. So it's pretty simple. So what hierarchical model does? Hierarchical model does is you have a parent entity. In this case, it's called a parent node or a root node. So electronics is a root node, and then you have child entities. For example, electronics has children, portable electronics, televisions, and then for portable electronics, MP3 player is a child, so on and so forth. You get the idea. But how this restricts us, that you cannot dimensionalize or capture the value from for another child, which is related to some value related to the existing parent entity for which you are doing an analysis. So let's take a normal everyday life example. We are running an analysis. We understand that customers who buy plasma TVs, they are generally old-fashioned ones, and they would be probably going to go to buy two-way radios. So we want to run a promotion, and in that promotion, we are giving X number of radios free uh, if you buy worth of X $1,000 of plasma product. This is not possible in a hierarchical model. We can't do that. Uh, so this model is pretty stringent in its applicability, but this stringency at the same time also provides it the a very good performance advantage. Uh, there are certain applications which are still using hierarchical models. Most most of our banks, financial institutions, their data models are converted on hierarchical. Hierarchical data models are very much secured. The logic cannot go wrong. There is no complex many-to-many relationships. And if you think about chart of accounts of any organization, hierarchical model should be able to do a perfectly fine reporting. Because standard chart of accounts also always club the unique account codes, and once they're clubbed, all the reporting and historical analysis could never go wrong with the rightly modeled hierarchical model. As we saw that this was limiting the analysis, the next evolution in thought was the network model, in which you can see clearly that the network model allows a child to have multiple parents. So you can now perform the impact of department A on project 2, but you cannot do that sort of thing in a hierarchical model. So these are not different types of the models. I would say this is an evolution of the models, the evolution of thinking. And there is one point that I would really like you to focus on, is that the one difference, the key difference between these two models is the semantics of the model. So we'll be using the word semantic a lot in rest of our discussion. So it's better to set up a little bit of context here for semantic. The semantic as a word means giving meaning to something. You are giving meaning uh, to a data point, you are giving meaning to a process, you are giving meaning to an activity, and all those data points are uh, can be captured in a model if they are bringing in the right semantics, and your model is also equipped to read those semantics. It goes two ways. We have to make sure that the question that we are going to answer through our data model has the adequate data points, and the process it's going to take to answer that question is also adequately semantically modeled. So the semantic ability of hierarchical model, where a plasma could have been attributed to a portable could have been attributed to a portable electronics, or see its correlation or covariance with MP3 player. This was not this model was not having enough semantics, enough depth in the architecture of the model that it was able to answer this question. Network model improved the semantics a little bit by taking away one of the limitations that was introduced by hierarchical model. But still, network model is was still shy of producing the kind of analysis that the new world, the prediction, the modeling capabilities that new businesses, world global businesses want to look at. So it was again, we it was thought that there needs to be a next uh, level of data models, and simple is the name of the game. So in 1970s, we were introduced with the relational data models. So what does a relational data model does? It does everything in a much more simpler and a much more elegant way. So it says that you can record uh, any record or any activity or any observation in terms of a table, and then you can design that table which identifies certain attributes or certain elements of those uh, data points. So for example, here in this case, we have a table uh, where we are looking at different attributes of data sets. So for example, we are looking at columns. So we have the status ID, surname, address, birth date, gender, and then we have the rows, so which is the records or tuples. Tuple is a technical word that is used for to describe the content that is created in a cell, which is used in a filter. But it's not really relevant at the moment. The point is that the whole table basically explains the semantics of a model. So relational data models were trying to create the real world objects, and the real world objects are very messy. So this is the best way we could have found some order out of chaos, and this led to the invention of SQL, as I explained earlier, and this also led to invention of multiple other tools like the query optimization uh, 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 techniques that have been introduced by using SQL relationships. So far, uh, we haven't talked about the financials. We haven't talked about the financial data modeling or anything. We're just talking about some history, ancient history. The point I want to prove here is this: that the whole history of data modeling so far has been focused on one thing, and that is enrichment of semantics. You need to have more and more data which can be classified, which can be predicted, which can be reported objectively, consistently, and insightfully for any business, commercial, personal, academic use. This is the whole story of the data modeling, which I understand so far is in the last from 1960s, how many years would it be? 60 odd years. This is the story. Now, how the story ties into our story, the accountant story. So before I do anything, it's kind of habit that I just Google anything. So I just Googled financial modeling, and Google gave me some sort of replies, and I put them together in a word cloud just to get a sense of things that what these searches or what this web scraping gives me. So some words which it uses consistently is that the financial modeling is about Excel, it's about spreadsheets, it's about business rules, it's about scenario analysis, it needs to be dynamic, it's very complex, so you better gear up for it, and so on and so forth. But somehow in this all words, I don't find anything like hierarchical model, network model, relational model, or anything like that, or semantics of the model. There is no explanation in the general. And if you go and see different websites, even you will see this definition as mostly revolving around spreadsheets and three statements financial model and how you can construct that and make it dynamic, use VLOOKUP, page lookup, index match, and all those kinds of crazy new formulas, rich formula library that Excel has. Keep on using it, and of course with the Google Sheets as well. If we look towards it, why this actually uh, created kind of a knowledge, I would say a knowledge gap or a knowledge vacuum. So the knowledge vacuum that it created is simply that when the Excel was invented or given or spreadsheets were put in, we were able to put our age-old accounting equation into a very advanced calculator, let's say. So profit and loss, balance sheet, cash flow, all the debit credit entries we knew, all the most of the drivers of the costs and the revenues we knew, and then we started putting all this information together in terms of one big calculator. Let's call it a calculator. And then in that calculator, we were creating multiple partitions, like making different tab names, making different calculators, linking them together, and then trying to collaborate among each other. While this was a huge success, and don't take me wrong, I'm not going to bash Microsoft Excel here. This is probably one of the best things that has happened to information technology and to accountants especially. But what it gave was that somehow the success was so huge, and the DBMS technologies were so much behind that Excel just excelled. they just there was no competition because it was a BI tool which could give you a semantic on demand. You can change the name of a column as you want to. You can add new information into it. You can delete any column you want to, and so on and so forth. This has created a solution which was ahead of its time, and this success somehow masked or somehow stopped the development of financial modeling as a more sophisticated concept, and it just put everything in terms of the context of the spreadsheets. And again, don't take me wrong, it's not a bad thing to do, because the Excel is really powerful, and but spreadsheets are really powerful, and they have been producing the financial models for last 40 odd years and 50 years, we can say. 40 years, we can say. And those financial models have been doing perfectly fine. A lot of business planning meetings have been conducted on basis of them. Excel has been competing against almost all of the analytical tools that have been introduced by different companies across like last 30, 40, 50, like at least last 20 years. And it has always won. In fact, now a sales pitch is of an analytical uh, solution could be that, buy my solution because it has integration with Excel. You can download this report in Excel. So if I have to download that report in Excel, why do I need that uh, your tool? Because probably I can do the same thing in Excel. So every so lots of competitors has come in, but nothing has been able to beat the spreadsheet so far. And this resounding success actually led us towards some sort of a complacency. And the disruption that technology is bringing in now is more fundamental as it compared to 10 years back. So this is the right time to take off away the curtain, enter into the realm of data modelers, and try to bring your financial domain and data modeling domain together in order to create more powerful data models for your for any purpose that you are working on. It's an organization. It's personally. I mean, you can pick up a hobby as well to do data modeling. Also, it can be it can be a detox, or can be a time away from the Excel files which you are required to work on. So uh, the moral of the story is that it was so good that it made us sleep for last 30, 40 years. Okay, so let's look at an ancient financial modeling example. What type of financial models are generally thought, or if you search what they are generally uh, talking about. So I hope with the change of my screen, you are able to see the new screen. Can you see the Excel?
Yes,
Rashid, can you
Farhan,
confirm?
we can see it.
Yeah. Okay.
Yep,
Cool.
yep.
All right. So this is a traditional three statements data model. A very small example I just downloaded from the internet. I think the website name is probably CFI Institute or something, but I'm not going to use it for any academic purposes. I'm just showing you as a sample. So this is uh, uh,
Hi, Farhan. We've lost your voice, I guess. All right, I'll call Farhan and let him know that we cannot hear him. So please bear with us. Right, Farhan is trying to connect again, and hopefully we'll be able to hear him. So please bear with us. All those who just joined us, Farhan is trying to reconnect. Unfortunately, we've lost him, I think due to some connectivity issues. So please bear with us. He will be back soon. And if you have any questions, you can send us your question. I think this is a great time where you can type in all your questions and send them our way. So towards the end, we'll take all your questions and Farhan will answer them. So if you have any questions related to data, business intelligence, data modeling, please feel free. And those asking about the recording, yes, recording link will be emailed soon after the session with the certificate of this chapter. But for the final certificate, which is the Future Ready Business Professional Certificate, you'll have to wait for a couple of weeks because we've given our students a leverage that they can hear the recording of today's session if they are sitting an exam this week. And so we would like to wait for them to hear the recording and then we'll issue the certificate. So hopefully you'll have the certificates towards the end of this month. But the certificate for today's session will be with you today after the session, so that will be emailed. Thank you to all who are sending us their questions. And those, Mohsen has asked a question, is this the last webinar? Yes, this is the final webinar of 2 Week 2 Strong, but our webinars will continue on different topics, but we conduct this program where we try to deliver 1,000,000 seconds of world-class learning. So yes, today is the last chapter of TWTS. Mohammed Amir, no, you don't have to send any confirmation via email. We have a list of everybody who has access to recordings. So based on those reports, we will issue the certificate. So you don't really have to, do any work in terms of sending us email. So we know that you've heard the recording, so you don't really have to send us an intimation or a confirmation. Ali Abbas, we recommend you to complete the recordings as soon as possible, but I think the communicated deadline was for 25 June, but I'll check again. I think it was in the email that was circulated. So try to finish the recordings by next week. So give yourself 7 days. There are just 10 previous sessions, so you can spend your weekend enjoying all the sessions. Great learning for everybody, especially those who are in the accountancy profession. Yes, Wasim, I've sent in the chat a link of an email that has all the recording links of previous sessions. So all you have to do is check the chat window and you have a link where you'll be able to get all the links of your recordings from this series. It's really unfortunate with technology, it's more like Murphy's Law in action. Anything that can go wrong will go wrong. So sorry about this technical glitch. I am sure he will be back as soon as his connection is restored. Yeah, Fatma has raised a very valid observation. It could be that his battery ran down. So it's a good reminder for all of us to keep our devices charged at all times, especially in an environment where load shedding is becoming an everyday challenge for all of us. So it's good to keep your devices charged. And another important announcement, those who missed the introduction of this webinar, tomorrow is an very important day for all of you, for all our members and future members. Tomorrow is the ACCA Virtual Careers Fair. It is a very mega event, which will be live from 8 a.m. till 8 p.m. We'll be joined by over 140 top employers from across Pakistan, who are coming with over 600 exciting, rewarding job opportunities. So, and not just that, we have, I think, 5 or 6 sessions lined up from top experts, career experts, who will, share their insights and answer your questions. And there's a dedicated section where you can also sit mock interviews. So if you want to polish your interview skills, so I think that's a great opportunity for everybody to join the fair and sit mock interviews. And you can check your email for the link to register. Or you can just go to our Facebook page, which is facebook.com/acca.pakistan. And on that page, you will have more information about Virtual Careers Fair. I also pasted the link in the chat, so you can copy it from there as well. But make sure you don't miss that out. So I think Farhan is now back. Farhan, if you can unmute yourself. Yeah, Farhan is there. I hope he can hear me.
Yes, I can hear you. By what was the time when you lost me?
So it was, I think very beginning of this slide when you were just
About the limitations one?
introducing. Yeah, the moment you started presenting the slide, that was of a spreadsheet. You mentioned you've taken it from a source on
Yeah,
internet. Yeah,
yeah. Okay, cool. So it means that it was quite some time back, actually. All
yeah.
right.
And
So
so what did happen? Was it your internet connection or your laptop battery? What was the issue?
I am not sure actually, because my internet is connected to the battery, and sorry, my laptop is connected to the power switch, and I see internet connection to be fine.
All right. Okay. Not a
Don't
problem.
know. Okay. All right. So let's go back. Now you can see my screen.
We can see your screen.
All right. Okay. And now I'm on an Excel file. So I believe there is where we ended, right?
Exactly. Yeah.
Okay. So while going through the this sort of financial model, which is the prevalent financial model at the moment, which is considered as the three statements financial model, which includes the profit and loss, balance sheet, and cash flow. And these type of financial models are prepared based upon the techniques that we are looking at here, which is primarily the linking your different cells, putting formulas in your cells, putting VLOOKUPs, sum ifs, and all those kind of things. This is a very simple data model that I picked up just for the sake of uh, uh, explanation. But if you go and see the data models out there, you will see, like, very complex data models, but the basic logic is remains same. Different tabs are performing different calculations, and the logic of those calculation is put in terms of those cells, in terms of the formulas, and the way that it is worked is basically dependent upon the business question that you are asking. There is a number of best practices that have been developed across this way of financial modeling. You can Google it, and you'll find that you have to have blue input columns. You need, your input should be blue. So you can identify that which cells I want to change, which cells I don't want to change. Your calculations should be dynamic. There shouldn't be some static number put in terms of cells, which would be bad for the later on reusability of the model, and so on and so forth. And I'm not going to go into the best practices of this financial modeling technique, because I think that this financial modeling technique is dead. Uh, it's already dead. We just don't realize it, and we need to do away from it as early as possible. I'm not saying that linking a file is bad or making an Excel formula is bad, but Excel is a calculator. You should use Excel as your calculator, and you should always have an Excel window open in front of you. And personally, I've seen that people who are good in Excel perform better in their careers for some odd reason. I don't know. I can't put my finger on that. But even in sales, even in manufacturing, it's just a trend I have seen. I think it's primarily because they are able to interact with data more confidently and they are able to produce more value. But anyways, so this data modeling way, in this way, is not a recommended data modeling from my perspective. And let me take you uh, through an alternative view of data modeling, how we can perform that and what we can do with that. Okay. So we just come back to our presentation, and there is just a few limitations I want to share with you with respect of data modeling when we are doing the spreadsheet based data modeling. And that is, one of the risks is that you do not have enough controls over your spreadsheet. Yes, you can make Z checks. Everybody does, but there's always a problem in a spreadsheet. In one of surveys I was reading a couple of days back, uh, it was suggested, which was very outrageous suggestion. I think the situation might not be that bad, but it was suggested that almost 90% of the spreadsheets have some sort of errors in them, whether the user realize or not. I would say 90% might be a little bit too much. If you can just put it even to 50%, that's a random. So your spreadsheet is correct or not correct. Probability says it's random. It's 50-50. There's a chance. On a corporate level, we have seen this risk materializes time and again. One of the example of this risk materialized is, I'm mixing up the name of the mortgage company, either it's Freddie Mae or Fannie Mae. They restated their financials for $1 billion uh, because the spreadsheet, which was calculating some accounting change, was unable to calculate the accounting change impact properly. Uh, Luckily, the change was in the other comprehensive income, but still, I think the dude who has must have made the mistake in the spreadsheet must have faced a lot of loud music, I would say. Uh, Personally, when we are working on a financial planning analysis or reporting or any sort of finance job where you're using spreadsheet, there's a fear that some link would be wrong, some Excel formula would be wrong, maybe PowerPoint is not updated at the moment. And when especially you are submitting the information to uh, really uh, uh, sensitive forums, in those situations, the fear becomes paranoia, and then paranoia becomes your lifestyle. And then, as an accountant, you are always stressed out. You are not creative enough, and even your neighbors don't like you. It's all because of this spreadsheet risk that you have been carrying in your job. The problem is so easy and so fundamental, but the impacts that it has could be like multi-dimensional. Uh, the, they are limited reusability. Their dynamism is a problem. They create data silos, many versions of the same truth. They're people specific, very heterogeneous in quality, and the biggest sin of them all, they hide the modeling techniques. They give you a chance to do an implicit modeling, which is very powerful, as we discussed before, making the tab names, making columns, making formulas. So it's all modeling. Your formulas are reading your Excel files. You are putting your sales number your sales quantity number multiplied with price. This formula is doing the implicit modeling of calculating revenue out of two variables for a country for which you have performed it on a column and you have named countries as like that. So it lets you do the implicit modeling, but hiding of the modeling tools is one of the major flaws. I would say that this spreadsheet based technology brings methodology brings to us. So leave it, follow these steps. We'll just go to these steps. uh, you need to think about not linking a file. You need to think about the query method. So remember, we discussed about the SQL. We discussed about the relational data models, created an optimization opportunity for queries. So what is a query? Query is, as the name suggests, it's a question. It's a question that you ask to the database. How you ask this question? Different languages. SQL is primarily a language, but now we have many more options available to us in which we can perform this function, but in a different way. Instead of linking the files, we can actually read the data from them directly. We have to be very efficient with our ETL. So what is ETL? ETL is, you extract, you transform, you load the data. That is primarily used in the database management, but our financial models are now very advanced and they almost take all the parts that a data model, that a DBMS model should take. So it will be very important for you to perform a good ETL while taking into account of your model and your design. Uh, Design your model on a star schema. What is a star schema? We'll talk about schemas in a bit. I'll show you how a schema is made and what we can do with that. But remember this golden rule. You will need to apply a star schema 99.9% of the time, and rest of 0.1% you can take a day off, because star schema should be able to solve your almost all the problems. There are other type of schemas as well, snowflake schema and other schemas. You don't need to, I mean, you can just have a little bit of understanding for that, but from financial modeling perspective, it's highly improbable that you will encounter such a situation where you don't have the star schema available to you. Be technology agnostic. You never love a product, never hate a product. This all are tools. We need to define our own tools. We need to make them work for ourselves. So we don't need to be clinging on to one specific set of technology that is available. And most important is digitalize your model, because then you will be able to create insights which belong to the future, or which actually takes part to the uh, insights that you want to get. Okay, enough talk. Let's do some action, shall we? Okay, in an action point, what I want to show you is an end-to-end process of a data model by using these 3 steps that I just explained, and then we'll take it from there. Okay, so we have here our demo folder. We just open a new file. Let's say we just open a new Excel file. We say ACCA webinar demo. So let's say we work in a company which does work in 2 continents, Americas and Europe, and we have this data available to us. So we have the products that we have been selling in that country. We have the country name, we have the segment, to which segment we have been selling this product, what is the gross sales, discounts we gave, COGS, cost of goods sold, just the abbreviation for that, sales, profit, how much it is, and what is the date of that transaction or record. So this is the data that is available to us. Uh, in a normal way, what we do is that we kind of make it sum ifs and VLOOKUPs and make pivot tables or something like that. But now we are going to take a little bit of different approach. So what we do is, let's say, okay, so in order to do this operation that I'm going to do right now, you might need to you will need to enable an add-in, which is a native add-in, which will let you have this Power Pivot uh, icon come in. How you can do this? You can actually come here. You can come to the options. You can come to the add-ins. And since I have put in the application already, you have Microsoft Power Pivot for Excel. If you haven't added it in, it would be in an inactive one or not an added one. So you can just bring it in here. It's a COM add-in, and you should be able to see this model right here. Okay, this is how you get this. This is going to be important for our work that we do, that we are not going to do. So first thing is we need to get the data. So instead of doing any linking or anything, what we can try to use is that we get the data, try using this drag and drop menu that Microsoft Excel has put in, which is called Power Query, which lets you extract the data and write extensive ETL operations by utilizing proprietary programming language that Microsoft has developed. That's M language. We'll just look towards that, and we'll see that how that language can really help us and make our life really easy. So one of the steps could be that we want to get the data from, let's say, the whole folder. So in this case, we have the folder, and in the folder, we have this financial data, and we want to read this financial data folder. So what this is telling us that it is connecting to a source, and the source nature is what? Its content is binary. Binary is form of file, so it's reading that it is a file which has a binary content. The name of the file is Americas. Its extension, that is after XLS, is this, and so on and so forth. So this event that we have just generated, if you think about it, it has created data. Data is when this file was last accessed, when this file was last modified, when was created, what are the attributes, what is the path, so on and so forth. So let us do a little bit of introduction to the Power Query. So this is the Power Query window that we will be able to see once we look towards that file specifically. And now what we want to do is we want to have the actual content that is in the data. So what we are going to do here is we are going to get the data. We are putting this drag and drop menu, and what it will do is that it will generate, not so fast, we have to take away the true away. So here we have seen that hidden. We don't want the hidden file to read. What we want is we want to read the actual table that is there. So what we do is, and voila, we have all the data that is in that file in specific formats that we want to. So here I would like to take your attention towards these columns and these small marks that are here. In Excel, on the spreadsheet modeling, we hardly try to determine the type of the data. In data modeling, it is extremely important that you define the metadata, which is the principal data of the model, in which form it would be. It is because at the moment, this data is saying that this icon is saying that this data can either be numeric or text. Now, this is a bad thing for your data model. Your columns should be neat. They should not have null values. They should have one type of data type, because that is then you will be able to query and reuse those columns into different multiple applications. So in this case, what we need to do is, what we want to do is, let's say we have this financial data here. Let's say we don't do any transformation. We will just close and load, and we only create connection, and we OK it. So now this file is not doing an is equal to link with that file. What it is doing is that it is reading the data completely from that file and then bringing that data into the Power Query window itself. Now here, let's take our example a little bit further. So you only got financial data till America, but you have certainly been given the financial data for Europe as well. 4:30 p.m. on afternoon, if you are on the other model, your Friday is not going to be a very pleasant Friday. So what you can do in this case, what we can do is very simple actually. We can just go into the Power Query. And remember, we said that we are going to look towards only the full folder. So it means that the other file is in that folder as well, which means if I refresh, now I should be having both Americas and Europe. So simple, easy as this. Let's say we want to do some sort of transformation and some massaging of the data in order to further make it neat and clean for our analysis purposes. So this is the part where we use Power Query. In Power Query, what we have seen here is the steps that have been applied so far in our transformation. All of these steps are automatically applied. I just pressed clicked buttons and that is it. So all these transformations, you can go and you can see them step by step. What is the step that is being performed at each level? You can at any point in time delete the step, no problem. Do it again. You can delete a step in between. It can break your query at times, but still it should be able to work. Yeah. So this is how this is your applied steps which you're performing, and these are completely dynamic. It really depends upon what you want to write, what you want to do the transformation. Okay, let's do some transformation. Let's say we don't, let's say the source name, we know it's America and Europe, so we can just change it to continent. .xls probably not what we want. So what we can do is we can simply extract text before delimiter. Let's say we can say delimiter is .xls. Actually, you can say dot also, not a problem. So we have contents here. So this is the name. This is the name of the table. So this is the financials table with name. We don't need this. We can take it away. Okay, so this is where our headers of the columns were. So you see, so far, Power Query has not been able to understand that this segment is not part of the column. It's part of the header. And in our model, in our data, we were expecting, so I can't open that one because at the moment the instance, the Excel instance is opened in Power Query. So you cannot open another Excel file unless you open a new instance of Excel, which is not what we need right now. So what we do here is we do this one and we say that, use Oh, sorry, I did it the other way around. I should be doing it the other. Use first rows as headers. I did it again. Use headers as first rows. Come on, dude. Oh, sorry. This is because I am doing it again and again on the same without deleting the previous step. That is the reason. So, okay. So now we have promoted the headers and we have found that, okay, everything seems to be in a fine place. This should not be Americas. This should be still continent. There is an advanced hack how you can uh, uh, such sort of problems more easily. But at the moment, I just want to show you the capability that what it can do. So from here to here, what we want is that we want all of them to be a data type of text. So they are text data type, and then we want this to does not have the header columns, which is the country column. We take it away, and from here till the end, we say this is data type is whole number, let's say. Date, very important. We need, there will be always one dimension in your financial model, and that would be the time. There cannot be a financial model without a time dimension. Very, very rare. So it is very important to understand the importance of how the date dimension can affect our modeling techniques, and what is the importance of the date column with respect to our overall financial model. And we can, from here onwards, we can just delete them, remove columns, and we have got a very clean, very clear data from the end. We can move this to the beginning. Generally, I like to look at like this: date, continent, segment, country, product, cross sales, discounts. So this is our financial data. Very good. And we can close and load. Okay. Now we want to load this to the inbuilt capability of Excel to of the data model. So we want to load this financial data table to our data model at the moment. Let's do it. Okay. 700 rows loaded. It's in the data. We don't see it anywhere here. Where you can see the data. See the data in Power Pivot. Come here in the manage. You see your table here. So this is the modeling view of the Power Pivot, which Excel provides natively. What this modeling view does is that it enables us to make dynamic calculations, which are called measures, create calculated columns, which can be added to specific tables, and then we can jump from one table to another table, from one model to another model. So for example, here we can create a measure, it's an auto sum measure, sum of gross sales. It is saying it is gross sales since the name of gross sales is in the column as well, it cannot let you name the measure same as the column. So we have changed a little bit differently. So this is the gross sales measure we got. So let's say we try to copy and paste. It won't work because it's not Excel. What we need to do is we need to define the formula again with respect to what we want to do. At the moment, the way you're looking at formula, it looks like an Excel formula, but it's not an Excel formula. It's a formula in DAX. What is DAX? We'll just come to that. So we can do this as discounts, probably discount, disc, okay, disc. And then we have these two measures here. We don't need to worry about anything. What we can do is we can just close this. Content. Sorry, I just need to go here. Okay, so what we can do now is we can add a pivot table from this and say, okay, now we have one table data model which has certain measures into this, which we can leverage. We can see their calculations with respect to every items that we perform. For example, we want to look at by date, let's say. We want to look at by country. So what we look at is that what is the gross sales amount for Canada in 2020, what is for France, and so on and so forth. The data I'm using here is the sample financial data, which is available for on Microsoft's data sets. So you can also go and explore the same data set to see how the numbers are coming in. We can further go down to, like, we can just make it like, so we can maybe take away date. We can maybe take away quarters here. We can just go here, and then we say, okay, in quarter two, how much is the product for this one? This is the uh, simplest data model that one can generate. There is a question here that generally comes in, that why did we make the measure at all? We can just do this sum of sales. It is a measure that is there. There are two types of measures that a model can have: an explicit measure and an implicit measure. When you drag and drop a column which is numeric nature and you bring it in the Excel and you create an implicit measure, that measure creates the value and creates the number at that point in time, but it cannot be reused in any other further calculations. It's a very interesting topic to look for, the implicit measures versus explicit measures. I would strongly suggest you to have a look at it, this concept in Microsoft's documentation, and then you would be able to appreciate the how much power you get when you write proper measure which is authored in DAX in if you are working in Microsoft's environment, as compared to an implicit measure. Moving forward, as we have two measures already and we have somewhat a little bit of data available to us, sorry, a little bit of information available to us. Now what we want to do is we want to add some more data to our model. So we got here, we go here, we want to add some data from volume. Okay, we do not have the volume in our model at the moment. Let's bring it in. Okay, so you see here in this view, you would see that there are two types of icons that we can get in our model. Both have the same information. The only difference is this: in the sales volume, just cancel it. I've converted this data into a inbuilt table format for Excel. So there is this option that you can actually select on any table that you have, which is, let's say, a normal table you have is, sorry. Let's say we have a normal table, let's say 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. And if I just change this to a table, it detects everything. So for example, let me say random. If I say I want to make it to a table, then the whole property of this data set is changed. Then the Excel understands this as a table, just like we saw the table in the DBMS, the theoretical stuff we were discussing when we were discussing the relational database model. So that's why this file, which I'm taking in as data, I've already made this source data, which don't have to do anything, just to press the insert table model. It already sees this uh, data in terms of a data table. And what this helps me to do is to avoid that additional step of identifying the headers. So we were doing the promote headers, demote headers, because the data in that Excel file was not structured like a table. In this data file, it's structured as a table. So that's what I'm expecting. Let's see. We have here new source. We go to a file. We say we want to read the Excel. We want to read this Excel. This Excel. Unit sales. Okay. All right. So we can close and load. Actually, now, instead of closing and loading, what I want to show you is, now this is a new piece of information that we have gotten that is about the volumes, about the units sold. If we look towards this data and this data, they have certain things in, uh, there are certain things which are in which are common in both tables. Dates, probably common. Segments, country, product. So when these dates are when there are common dates, we can actually merge this both tables in terms of one table. And that we can perform very easily through this drag and drop menu. So for example, what we can do here is we can just go here. We can say, I want to merge queries as new. Financial data. I want to merge with unit sales. So financial data, I want to write date is my first item of identifier. I want to say segment is my second, country is my third, and product is fourth. Okay. Beware, we need to go into the same order. 1, 2, 3, 4. Cool. Now look at this join kind. So there is a whole section where you can identify which type of join you want to make. When you will see in SQL, there is a huge, the operation is about joins, left join, out join, inner join, and so many joins. Joins are basically when you are mapping two different tables with each other. In this way, we can join these two tables by defining two dimensions. And when we do them, we come up with a new table, which is called merge. We can change it, of course. We can say it profit and loss. So you can change the name of the query just to make it easily readable. You can actually add the spaces here, but it's better not to add the spaces here because then your code becomes a little bit difficult to read later on when you review that. Okay, so now we go and we close and load. Add this to data model. Come to our data model. And we see here now that we have three tables: financial data table, unit sales table, and profit and loss. Profit and loss is basically a combination of both the tables, but I think I forgot to do one thing here, which is actually expand the columns. So let me just go back. Show you. Okay, so this is where we merged. Now we can expand the column as we want to. Sorry, I went a little bit ahead of myself. Units sold. Okay, cool. So we have now units sold, and this one there, and this one is all loaded to our data model. And now we can go and Power Pivot. So how many units have been sold? How much discount was given? How much sales have come in? How much COGS is there? How much profit is there? All the data is coming in here in terms of the numbers that we want. The measures that we wrote previously, they were on this column on this table, but actually this was just for the initiation. I just wanted to show that how to create the measure, but actually the measures would be created in the main table, which is linked to our overall modeling structure. So now if we look at our model, we have three tables. These two tables are no more needed, as since we have already utilized them. We just hide them, and we have one table here. So this table is basically our fact table. This is where all the facts of the model is already existing. What we need to do is to make a model in which we can question that model in terms of different dimensions. What are the dimensions? Dimensions are the attributes that can draw our interest. For example, from the financial modeling perspective, we would like to see the products, we would like to see the discounts by products. We like to see the profits by country. We'd like to see quantity sold by segment. So there are different questions that are there, and if you see, every question involves one attribute of the fact table. So what we need to do is we need to construct a modeling structure in which we can bring in all this semantic information in terms of one logic, which can perform calculations in the context in which they are called. Very difficult. Let's try to do let's try to build upon this example further. Let's say we have got some other information as well, which is about the strategy. So our bosses have met and they have come up with a brilliant strategy, and that strategy is in terms of a guideline document, and that's a PDF. And we got the PDF, we got the guideline. Okay, so this is the PDF, how it looks like. Okay, let's transform. All right, so we have the guidance, that this is the strategy that we need to follow in each country. In France, we need to grow. In Germany, we need to defend. In Canada, we need to retreat. In Mexico, we need to have exponential growth. In the United States of America, grow, blah, blah, blah. And what we do is we transform this. We say promoted, promotes, and this is the first word hazards, and this is the guidance we got. Close and load. All right. So we have now guidance as well in terms of that what we need to do for each country, but it's very difficult to make a connection. Either what we can do is that we can put this like just we did for the previous ones where we combine the two uh, tables together. We can do that same operation here. We have the country as country to country as the key which can map them together, and we can put it same into the one profit and loss table. But in the financial modeling, the new data points keep on coming. It just never stops. So this transformation, this modeling is very difficult to do. In this case, what we need to do is we need to take a modular approach. And here where the schema comes into play. So remember we were discussing about star schema. So what is a star schema? Star schema is you keep your fact tables in the middle or in the middle of your model, and then you create the dimensions around them. And those dimensions, and you utilize those dimensions to calculate any sort of complex or semantic information that you want to draw down. Let's try to make a star schema. Since we have lesser time left, so let me just jump to the solution which I already prepared. In just, it will save us a couple of clicks because there is a lot more which I want to share. So I'm just gonna pick up my pace from here. Okay, so I was thinking probably, yeah, this is the one that we have. This is the same financial model that I was preparing in front of you guys. Uh, Basically same sort of information, everything is same, data set is same. However, it has a little bit of steps done into it, which will save us a little bit of time and talk about the concept. Okay, so we see here, so yesterday I was liking the name Fact Financials, so I was naming it Fact Financials, but this is essentially the profit and loss table. So you see here, we have our Fact Financial in between. We have a date table. This is by far the most important table that you will need to make. We'll just come to this date table in 2 minutes. And the rest of the dimensions that you can also create from the same fact table, or you can have the dimensions coming from other guidances or uh, uh, some other sources. In this case, what I have done is basically all the dimensions that we have made here, they are actually made within Power Query, and they are dynamic in that sense because they are always reading the data and they are being updated as per the dimensions are updated. So let me just show you a few dimensions how we can make. So we have financial data as a normal one. The fact financials was a normal one, sorry, in which we brought both the sale quantity and the data there, analysis there. On top of it, what we are doing here is we are picking up the countries which are distinct, all the distinct countries in that table. And how we are doing that? We are basically performing the distinct function by doing this as simple as this. Add as a new query. Remove duplicates. To table. Voila, country it is. And change the name and you have the dimension. And whenever the fact financials will change, your dimension will already change itself. Similarly, what we did for segments. In segments, we took a little bit of more elegant approach by doing what? By basically, instead of duplicating the fact financials, we are referencing the fact financials. So this is a query which is referencing the fact financials, then it is deleting all the columns other than the segment, just keeping the segment and just removing the duplicates, and then we have the distinct segments here. Same technique we have applied here in remove other columns, and this is where we will end up with putting our, sorry. So this is how the model is constructed in its base at the moment. Let's come to the schema that we are using here. I really want to focus on this schema. We all do profit and loss, balance sheet, ratios analysis. In our world, in our financial world, uh, entity is a good dimension. Country, for example, uh, you have businesses in different geographies. So country could be a dimension. You could have different products, that could be a dimension. You could have different business strategies. For example, in some country you want to expand, some country you don't want to expand. You can create those clusters as dimensions. So whatever semantic enrichment you need to put into your model, that has to be reflected by a dimension table to that. And date is a universal dimension table towards that. Before we uh, talk any further about the data modeling, what I want to do is I want to change to another tool, because this the Excel tool might not be very uh, very you can say uh, pleasing in its GUI. So what you can do is you can also use Microsoft's other tools like Power BI, let's say. So Power BI is a business intelligence tool, and Power BI has the inbuilt capability to connect natively with financial model and the languages that we were talking about, DAX and stuff. That is all available uh, in Power BI as well. So how can we do that? So we have made a Power BI data model. We have made some layers, some dimensions. The schema view is there. Now we just jumping to another uh, tool set. So what we can do is actually, you can just open up completely new PBX file. This is how it looks like. It's free. You can just go on the Microsoft website, download Power BI, but you will not be able to use the cloud and the other infrastructure of Power BI, but you can, of course, take the desktop and use it like an Excel or something. There are many advantages of using PBX file, as they are more stable as compared to Excel. They don't crash, they have better performance. And if you're going to use the cloud as well, then they are of course a better choice to work with. So here, how you can import the whole model in itself. So instead of talking about the sheets, the linkage, the files, we are going to import the whole Power Pivot model, and we can just import it like here, here, here. Migration is completed. All the data has been brought in. So this is the step that I have already done here in this demo, in this file. And in this file, what I want to show is the data modeling view. But before that, what I want to really emphasize is the date table. Date table can be constructed automatically by the Power BI itself or any other DAX, any other operation. We have made the date table here, and this is how simple it is actually. So there is a function in DAX. DAX is abbreviation of data analysis expression. This is a language, proprietary language developed by Microsoft to facilitate the data modeling part. It does not have an equivalent as far as I understand in any other ecosystem, but probably LookML in Looker could be, which is a Google product, could be a very close relative to this thing. So DAX language has many advantages you can get from. It's very simple. It's simple, but it's not easy. It's very close to Excel. Syntax is very much nice for us accountants. It's easy to pick up, and then it has specific functions like closing month balance, opening month balance, functions which are not really available there in high language scripts like Python, R, or any other scripts, but it's very much finance focused since Excel's DNA, Microsoft has that finance DNA in it. The Excel has been the primary rule, so I think that has somehow uh, 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 influenced the thought. So what we are trying to write here is a dynamic date table, and the simple the command we have written is calendar minimum fact table. So we are saying that generate a calendar in which its minimum date should be the date of the financial data, and its maximum date, I'm just putting in 22, 12, 13 as like, just the time where it should be maximally progressed to. This date table is can be created into in many ways: DAX, Power Query, creating a function. It's up to you. Whichever way you like, you can make the date table. Date table, we have some hierarchies. Now here it's a very simple thing to see, but uh, there is a lot of in the hierarchy. We know that dates have compositions. So you have year, you have quarter, you have month. We are now projecting a hierarchy in a table, which is part of a relationship, of a fact table. So if we go back, all those semantic techniques which we were talking about, like network model, relationship model, hierarchical model. Now this all is coming in. There's a sub hierarchy in a table called for date only. So we are mixing and matching. We are picking up some hierarchy concept, we're putting it in a table, we are relating it to a fact table, and then we are using a language to do calculations for us. So as we are quite close to our finish quickly to some stuff that I've already wrote here as a DAX expression for the for analysis purposes. So what I wanted to show you here very quickly is this one measure that we have just made. So this data is still 2021. What we are trying to do is here that we are trying to forecast, which is basically the primary logic of the forecast that you primary reason of the data modeling that you have to do. Here what we are doing is we are just utilizing the existing data, which is the sales quantity data of existing months. We are changing its semantics to another year. I'm not going into DAX in detail because DAX is really complex, not really complex, is needs its good time for understanding. It's not possible to explain DAX very quickly. You will need to learn and do the understand the documentation and devote some time to it. But once you do, you'll fall in love with it. It's a beautiful language. You can do amazing sort of analysis, and just like in no time. So for example, here we are projecting by just using one line formula, and can actually forecast these products by we can make these forecasts actually by any dimension. So we can look at like from product wise, what our forecasts are going to be. Then we can look in terms of like maybe country wise, we can see that. Yeah. So we have country, we have products, we are just putting in the forecast that is there. And the forecast, we can change it dynamically with respect to any item that we want to. For example, remember we had this table guidance. Where is that table guidance? Okay, sorry. Guidance. So we have like a table here where we have been given the guidance that this is your target, what you need to do. Let's say we have translated that target into a financial target. Now, think of this as an assumption sheet in your data model, in the ancient way of data modeling. Uh, we now have translated those targets in terms of what are the financial equivalent of those targets. And then we can make a measure which is just calculating those targets in terms of a dynamic calculation, and then we can incorporate those financial targets into our next year projections. It's as simple as that, and everything shall be taken care of by the data model itself. So what we are doing here is we are using the relationships, the data model. We are using a language which can access that data model and which can uh, go to specific coordinates. Remember the example that I was giving, the map. It's a map and we have to go from one place to another place. These are our roads. Mayors are our cars, our means of transportation, and and the business problem is our one point to another point. So this overall schema would result in terms of enabling us to make the measures which are extremely powerful, and they can generate results, they can generate insights, look into towards the future, and perform any sort of analysis that we want to. There is few other items that I'm just touch base with on the base of this thing. The modeling that we are doing here is called tabular object modeling. So the tabular object modeling has multiple uh, properties attached to it, and which is very much enriched. When you're working in Power BI, or Microsoft Excel, you do not have the capability to expose all the properties of a tabular model, but there is a open source software, tabular editor. You can download it, you can Google it on, it's free. All the things that we are working here, they're all like free. You don't need to spend a penny for that, and everything that I've learned so far is also mostly from free resources, YouTube, LinkedIn Learning. There's so much data out there, so many smart people out there. You just need to listen to them, make up your story, bring it together, apply it on your field. That's how it goes. uh, Here we have the tabular editor, where we can see the relationships, we can change the relationships. We have all the tables here. We can create measures much more fastly as compared to, for example, there's a measure here, discounts. I want to calculate, let's say, discounts margin we already had. Okay, the profit margin we already had. Let's say I want to calculate net sales per unit cost, per unit sold. Okay, so I can simply create a new measure, and I can say it is, let's say, net sales per unit. And what we can do is we can say divide net sales with a sales quantity. And we have this measure in our, yeah, and let's just take away the other one. Yeah, okay. So we have this net sales product, for example, we have this one. By country, we have our net sales per unit cost. If we want to look at it in a different way, we can just click it. Just we can search and look for answers in a different way. For example, if we want to look at our, there are few visuals that I want to show you how they change your perspective about the data that you are realizing, that you are looking at the moment. So for example, if I just put here, where's profit margin? Okay, I want to analyze the profit margin and I want to explain it by country, and I then further explain it by product, and I further explain it by segment. That's it. So 14.2% margin. If I do this, now you see here, these are this visual is powered by artificial intelligence in Power BI in itself. So we can use its artificial intelligence to understand what's happening. So we say that, okay, the profit margin is 14.2, the highest profit margin is in channel partners. And if I gonna go further, what is for different products, what is the profit margin? And then if I want to go further, we can see, okay, which country has the highest profit margin, and so on and so forth. So multiple options here with respect to the matrix, with respect to this calculations, with respect to the measures that we have here. And just we are almost at the end of it. I just want to show you one last thing. That is that you need to digitalize your model by publishing or going to the cloud. So far what we have been doing is all available, is all what is in your desktop environment, but it becomes much more powerful when you are putting your data model in the cloud, because then the collaboration becomes much more easier. So for example, here I am publishing this model to Power BI's workspace. And then let's say I take a off and my friend is working on a file and he needs to make some sort of analysis. Then what all he needs to do is, don't look for that PBIX, don't look for that Excel, don't look for that data model. What he just needs to do is, he or she is that just get the data from data set, go to that data set. Let's say this one is, let's say 45 seconds ago. Create. It'll take a little bit of time, but that's the logic of it. Okay, so here it is. So the data is here, everything is here, but you cannot see its model. Sorry, you can see its model, you cannot change its model because you're querying the data from web. So as a, instead of sharing your Excel file, sending it to each another, you create a golden data set with respective dimensions and measures into that. And then you let the whole department function or your colleagues use that data set. And that data set is one source of truth, which has all the semantics available into it. And those can be enhanced and enriched further whenever want to be done. So this is the final part of the data modeling that we can do. I will just do a very quick recap. On ETL, you need to do a proper, you need to have your go-to shaping environment Power Query is a good place to start. It's native to Excel. M language is very logical language. It's simple to understand. But once you understand the syntax, then it becomes much easier, and the syntax becomes much easier. This is why GUI is excellent. It creates the code for you. Just use the GUI, create the code, and then there's just be lots of like Excel is fun, or like Mr. Excel, or chandu.org. I mean, there are so many channels out there. Power Query, just type Power Query, and there you'll find a lot of tutorials. So that's why I'm not explaining any of the technical stuff. In Google based SQL based, a little bit difficult to use because the GUI is not there. Uh, when you are doing the data modeling, design is everything. Star schema is your friend. Access your data using an appropriate language. I just not showed you, just told you actually what that you can do it with the DAX. Keep it modular, put it together, so you can keep on adding new and new items into your model. If there is one thing that take away from here, that is the DAX. It's really a beautiful language. You will enjoy it if you are into data. Digitize your model, publish it to cloud, make the AI work for it, machine learning work for it. There are some certain drag and drop tools, which unfortunately due to time we couldn't go into, but maybe next sometime other I would like to show you. And then the final thoughts I have are this: we need to change our mindset. That's the most difficult one. Grid-based formulas are dead. So we need to think about the new way of thinking. We need to think about the expansion of our discipline. Finance is entering into data science. Data science is entering into finance. Uh, don't need to be afraid. I think we're more powerful together. Analysis are being democratized. I don't know how to program even a single language. Mostly it's all drag and drop. Uh, in some future, machines will be answering most of the solutions. So what we will be left with is actually discover elegant solutions. Uh, and in order to discover elegant solutions, uh, one of the techniques that I really found helpful is meditate. Don't get under pressure. Uh, think about the problem. Tools are very strong. Equipment is so much. There's so much data out there. If you just know what to apply, when to apply, without panicking, you'll be fine. And at the end, I would just say this: that this financial modeling is more important than ever. It is probably going to determine the future of finance for at least next 10, 20 years. It's a very dynamic field. There is no right or wrong. Uh, be eager, be curious, keep learning. Thank you very much. That's it from my side.
Thank you very much, Farhan, and what a great note for us to end this season of TWTS. Be eager, be always ready to learn new things, and dedicate yourself to learning a skill or two. So, thank you very much. I think we've received such praise in the comments that people really found it valuable, and they would definitely be knocking your door on LinkedIn for more help in the future and make you their mentor. So thank you very much, Farhan, for all the time, and thank you everyone for attending today's session. We've already, I think, spent more time than
Yeah,
what we actually dedicated. So are we going to take any question and answers, or people just can reach out to you if they have any questions in particular? What do you
I
suggest?
I think we can go for 15 minutes question answer if that's fine. I can
Sure.
spare 15 minutes now.
Sure. So those who have some time can stay with us, and those who have other commitments may leave, but they'll be able to hear the question and answers in the recording part. So one question we are
Also, just one
receiving.
thing I just wanted to, just one thing I just want to tell is that all this material that I'm showing here, I'll put it on my GitHub repository. I'll share the link so you can download all the material and the links that I used in this stuff. Okay, please go on.
Absolutely. So a lot of people were actually asking for those sheets that so they can practice. So that's good that you'll be sharing the link, so people will have access to all the resources that were actually shared. So one very common question we're getting is people who are very, very new, for example, those who are still students, and they want to master this data modeling skill. So what roadmap do you suggest for very early beginners who have very, a little idea about Excel or Power BI? So what steps would you draw for them, a small roadmap that they should follow for
Yeah,
next, let's say,
that's a
two
very good
years?
question. Yeah. Okay. So I think what you should do is first of all think about that what you like in life. For example, cricket, let's say, and get the data set for cricket from ESPN or anywhere else. And then start analyzing that data with respect to any tool of your choice. You like Excel, use Excel. Google Sheets is free. If you have a Google Gmail account, you have the Google Sheets and you can play with that data set. Begin with a spreadsheet. This is the first step. Must not master you can never master a spreadsheet, but begin with a spreadsheet. Be comfortable with it. Then on top of this spreadsheet understanding, then you will need to understand one language at least, computer programming language at least, to automate the tasks. These are the two basic steps that you need to take right now before entering into the job market. You need to know the spreadsheets, you need to know one programming language.
Right. Sure. There is another question, Farhan, that's from Ayaz Javed. So he's asking, in these times of uncertainty, should we rely on any of such models, or just want to take your input on this? So this is a question from Ayaz, how effective these models are in times of such uncertainty that we are currently going through.
It's very simple actually. I think the models are as capable as you make them to be. If you have made the model in response to an uncertainty and it is not the model, it's the problem with the design. Uh, Models are supposed to be able to perform calculations which are difficult and complex. And I would take the example here, the COVID example. So last year, when the COVID hit the global markets, we we had no idea how to model COVID into our financial models because 1916 was the last pandemic. We don't have the data. So what now? How to model it? Now many things emerged together, and that's the time when if your model is based upon these few rules that we share today, like a star schema, flexible, modular approach, then you can integrate those uncertainties, those variables into your model and develop a solution. To give an perspective, in this case, what I did was that I started looking for the global mobility data sets that was made available publicly by Google. I think after 2 weeks when the pandemic became pandemic, the data was telling that how much reduction or increase in people's movement has been recorded since the base date. So Google was picking up this data from all the GPS services, putting in the data sets, and it was all public, and you can just go and see that, which gives you an idea. Now, if you put that data with the COVID cases data, then you kind of make a picture that when a lockdown will come, when the business will shut down, what is the positivity rate right now? So there is in the uncertainty, I think the data modeling becomes really exciting because nobody knows the answer and you got the best shot. So you're the hero of the movie at that point in time.
Right. Good answer. Thanks for that, Farhan. So there's another question. This is from Muhammad Faisal Kadir. Muhammad Faisal is asking, actually, okay, so the question is, can we add ratio analysis in financial modeling?
Of course, financial modeling is dependent that the ratio analysis is heart of the financial model. So if I tell you $1,000 is my sales, doesn't tell you anything. You will always know the information in a ratio. You'll say, okay, 1,000 is 10% more. 1,000 is 10% of return on equity. 1,000 is 1,000 translates into 9% in return on asset. So the tables that I was showing you, the data modeling, you're saying that there are in finance we have data that is profit and loss, balance sheet, majorly these two data sets, and ratios is a combination. If you have two tables and you are calculating the financial measures for these two tables, ratios are simply one divided by another.
Right. Yeah. So we have another question. This is from Muhammad Shuja. He's asking, do you think Python or R is beneficial if I'm looking to expand my skill set?
Very, very good question. Actually, this is this is one of the most famous questions, I would say. So there are few others as well. Android is better or Apple or So this is also a question. Python is better or if you have to learn your first language, learn Python because it's easy, relatively. It's high level. It has multi dimensional applications. But it as your second language, when you are really into the game and you are into the data and data science and you want to predict, you want to create like really Python can do all of the most of this part, but when you are into a niche, then R is your language. So as a beginner, as a one language serves all, Python is more appropriate. If you are into data science and your project is specifically hardcore statistics, data science, then R is the language you should pick up.
Right. Thank you very much. So let's take one final questions, and for all
Sure.
others, because we cannot really accommodate all the questions in this session, but people can email us and we'll make sure that we reply to their questions. So this is from Ariba Ijaz. When we talk about data, surely not all data is useful or accurate, and still so much data is used when creating an analysis. How can we filter out unnecessary data, and to what extent do we need to take in the level of accuracy of data when applying it to a model and or business processes and forecasting data? So how can we get rid of bad data when we are building a model?
Yeah. So there are two ways you can do this. One thing is that you do not bring in the data you do not need in your model. Sometimes when you're beginning a data project, you become greedy and tools are so flexible, you can bring so much data and that, you know, well, you can get overwhelmed. So the first rule of thumb is if you are not doing an analysis on that data should not be part of your model if it is not being part of any calculation. The other point is that the data validation step of your data model, where you are putting logical checks in order to ensure that the noise is being filtered out, should be applied at the ETL stage. So the stage that we were discussing, extract, transform, and load, that's the stage where we should be putting in logical checks. Like the numeric table should always be numeric. A date cannot have a month above than 13, above than 12, sorry. Uh, 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 an alphanumeric code, sorry, this primary key code, everything has to be unique. And if it is not unique, it generates a report and sends it to you. It's very common in the existing reporting tools that are available, like one of the tool that I think many companies use is BUFC, Business Object Financial Consolidation. It has amazing data validation rules into that. Most of the ERP systems have the data validation rules. So generally, the data you collect from ERP or from a structured source, it doesn't have noise. It makes your life easy. But if it's an unstructured data, Excel file, CSV, TXT, email, then you need to put in extremely stringent validation controls on the ETL stage.
Right. And Farhan, you'll be very happy to learn that your session has been so inspiring that we are getting comments such as people thinking about switching careers from financial advisory to data science. So I think it has been such a big success. So thank you very much for your time, and
Yeah.
we look forward to engaging with you again in the future. And thanks everyone for attending today's session. The recording will be emailed with the certificate of attendance. So make sure you check your email, keep your data. When we talk about data, it's very important you keep your data on your MyACC up to date. So your contact details, your phone number, so you don't miss out an SMS or an email. So make sure all your contact information is there, that is accurate, especially the sector that you work in, because we send many sector-specific resources as well. So make sure all your information is accurate, up to date. You stay connected with your global network and continue to learn and grow. So we'll be back with the third season very soon. So stay with us, keep growing and keep learning. So thank you. Enjoy rest of the evening. Take care. Allah Hafiz. Bye-bye.